For the record, I'm done trying to make y'all comfortable. For the record, you ain't trying to grow, then it's done for you. For the record, lab on me going all the way. For the record, ain't trying to link, no time to waste. For the record, for the record, for the record, for the record, for the record.
Good morning. What's up, Hub? Hey, wait, James, you hate Reagan? What the hell is going on here?
Much prettier. Much prettier. What's going on? How are you?
I'm good, man. Just just waking up, man. Got my, mojo.
Okay.
Get that funk on.
Yeah, you know what I'm really impressed with?
Huh?
That hat you're wearing, bro. Super excited for you, man.
But you just want to play it?
Yes. Let me just
Good.
play. Oh,
what are we doing here?
I'm not sure. I've had a few cups of coffee this morning, so I'm a little jacked up, son. You know what I'm saying? That mojo.
Hey, yo, I wonder, like, does anybody else do that? Like, get a few cups in you, you know what I mean? Like, are we getting to that age where you need a few cups in order to just, like, get up and do something?
It's a solid cup, then straight to the bathroom, then another cup.
Hell
you
yeah.
know, that's a inside secret of my morning routine.
All right. Inside the life of James Morris. Yeah, man, I got do two of these, man, and freaking I'm ready for the day, or I got anxiety all day, whichever one. I don't know which one it is yet, but I'm all jacked up.
Sometimes when I feel a little frisky, I'll put a little shot of espresso in there, you know what I'm saying? That's the only when I want to act like a big boy or whatnot, you know? Like an adult. Like an adult beverage first thing in the morning.
Wait, you don't put espresso in all the time?
No.
Oh, just me, huh?
Yeah.
Yeah.
I only like to smell colors when I first wake up.
Oh, that's good stuff, man. They got some people in the comments. Let me see.
Yeah, I need to switch this over to comments. There they are.
All right.
Good morning. Oh, I still can't see their.
So we got SJ. It says SJ says good morning. We got Tyler Hartigan from Bay Area Pressure Washing. What's up, buddy? We got David from Spur IT. He says make sure to mention school teacher Amazon wish list. Oh, you wanna mention that, James?
Yeah, so we put together a little thing. We had seen this and teachers needed, and please, David, if I say this wrong, please feel free to correct me.
Correct him, please.
Please correct me. So David actually put a thing together for the teachers. We had seen that they needed some things, and they were wanting to put it on the hub. So what we did is we asked them to put a link of the things that they need, and whoever may want to sponsor them. We've also asked them to do a video. There's actually one up this morning. I forgot the teacher's name. I do apologize, but it's up there. Her Amazon list is up there. Please go check out her list. She's switching from the third grade to pre-K, so it's like a brand new start for her, and it would be amazing. I guess he's saying today only. Today only is we're going to talk about it. So we didn't think we had any good news. Here's even more good news on top of the good news we already have to talk about later. So
bunch of good news, man. I love it.
I mean, listen, we're literally helping teachers. We're building a community. Use videos, tag your buds. There you go. Today only. And why not? I mean, listen, it's a Thursday. What better way than to go to a teacher's Amazon, click the link, and just buy one thing?
Yeah, and I'm going through the hub right now. We got let's see. If you guys look for it, I'm sorry, hopefully I don't mess this up. Melina, she has one up. We got Adrian has one up. And if you look for the Amazon sign, it's in orange in the hub. Brooke has one up, and let's see who else has one up. Nicole has one up, and that's all I see for now. There might be more, but I can't see it. So definitely check that out and help them teachers out. It's such a good thing to give back. So today only.
Nice.
Yeah. So All right. And then we have we got Mr. Ron Schuyler in the house. He says good morning. We have Kayla too. What's up, Kayla? She says good morning. And then let's see, we got Bianca, and I think that's it. Oh, David, Mr. David Wingo. All right. So today we have Pam and John from Ohana Lending Group.
Ohana.
Oh, we're doing this.
It makes me love the name. It says peaceful relaxation. I love that name.
I do too. So we have them on today as our special guest. So I'm going to bring them on real quick. Yo, good morning.
Good morning.
How are you guys doing?
Two of my favorite peoples. You know what I'm saying? Two of my favorite people.
He gets paid to say that.
I do. It's only they pay me in Starbucks, by the way. Eventually, Starbucks is going to get Morning Mojo, and we're all just going to get some free Starbucks around here. That's the goal. That's the goal. We heard it don't happen until about the 100th episode when they know we're real. You know,
I just need to throw out a shout out to Bang Energy. It gets me up every morning.
Because I'm drinking and they paying me for it. What's going on, guys? How are you?
Good. How are you?
Not too bad.
I'm living my best life. I know that. Like, today's a good day. It's a great day to have a great day. I know that.
Yes, sir.
Yes, it is. So, Ohana, so what I have to ask what the name is, like what's it about? Let's get to the basis of it. Why the name? Why Ohana?
So, I am in love with Lilo and Stitch. I'm sure some people have heard of the movie. It's a Disney movie. I fell in love with the concept of that movie and the meaning behind it, and it's centered around family. It's a Hawaiian movie. Ohana means family in Hawaiian. So it was family is a huge, huge part of my life. My family comes first in everything I do. So when thinking of a name, I wanted something that I can relate to. I wanted something that would bring people together, and it has a lot of sentimental value to me. So I went with Ohana Lending Group because our intention is to treat everyone like family that walks through our doors. I'm not going to sell people things just to make money. I want to make sure that they're set up properly as well. So having family be the center of our business was what I wanted. So I went with that name.
Perfect. I love it.
So I got a question for you. So what exactly is it you guys do?
So I'm a mortgage broker, which means that I originate loans on the wholesale side. So you don't have to deal with the big banks like Bank of America, Wells Fargo, PNC. All of those banks are retail. So I work on the wholesale side. I originate loans for people who want to buy homes or refinance the homes they already have. So if you're looking to get any kind of mortgage, I am the person that you go to. I communicate with all the banks on the wholesale side. I have several banks in my network that I work with. So basically any mortgage needs you have, I'm your go-to. So you don't have to deal with all the big bank sides of things and all the large businesses that you talk to a different person every single time. On the wholesale side, you work with one person, and I'm that person.
So that's because when you said wholesale versus retail, that's the first I've ever heard of, especially in that field. You just my mind there. So you're saying the difference between a wholesale and retail is more direct. You get one-on-one time with you versus I don't know who's going to answer my call.
Exactly. That's a big part of it. The other part of it is that I have access to more than one lender. When you go to Bank of America, you're only dealing with Bank of America rates, Bank of America products. I have a vast array of different lenders. So I have probably every single kind of product you can think of available to me. I can also shop around for the best rate. I'm not stuck in one bucket of what one company offers. If I don't like the rates or the programs of one lender or one bank, I go to a different one and I find what works for my client. So you get the one-on-one attention of me, but you also get access to any kind of mortgage provider that will work for you. So there's a couple benefits to working with a wholesale loan officer than a retail.
How many lenders do you guys have at this time? And are you exploring to get more?
Absolutely. So every day I'm looking into new lenders. We are fairly new. We just started. up a couple months ago. So building your network of lenders comes over time, just like any kind of other network you build. So I probably have about 10 that I can work with right now. There is hundreds out there. So as I get new clients through my door that need different options that I don't have available, I go hunt for them and I get them what they need. So every day I'm looking into new lenders. I have new lenders calling me every day with asking me to sign up. So it's always going to be growing.
So speaking of rates, what's the rate going out right now, and what's the difference? Like, how can you get a better rate from one lender to another? What does that look like?
So the rate, there's a couple things that we look at with rates. With rates, lenders are competitive. So if you're working with the lender that specializes in conventional and FHA, which are the standard mortgage products, they're going to be competitive with other lenders that specialize in conventional and FHA loans. If you're working with someone that is looking for a different mortgage product, those lenders are going to compete with each other. So it depends on what kind of mortgage you're looking for. It also depends on your personal situation. Credit and income and purchase price drive the rates as well. So right now, conventional rates, depending on what the borrower is looking for, are about 5.5%. FHA rates are a little bit lower than that by about 1% or so, give or take. Of course, it depends on your situation. So none of these quotes are exactly what you're going to get. If we're looking at what's called, and I'll get into this probably a little bit later, what's called non-QM loans, those rates are higher because it's a higher risk. So those rates are up above 6-7% right now.
Gotcha. So and I know I'm going to jump around, but whatever. So what's this? I want to hear real quick. What's one of the struggles? What's something that you've gone through? You're just a couple months old. So what's some of the struggles? Like what does it look like for you to start a mortgage company or a lending company? What does that look like? What kind of barriers have you gone through? What does it look like? Personal struggles with it. Did it was it easy? Was it hard? What made you take the leap? What's the leap look like? Like literally, like what's that leap look like? Because like a lot of times, man, we get so shut down with fear of taking that leap, man. Like crippling fear to take a leap into another realm where we're not comfortable being a business owner, because working for someone is totally different than owning a business. So what does that look like for you?
So it was terrifying. I'm going to be completely honest here. It was absolutely terrifying. If it wasn't for John, I don't know if I would have took the leap. So he gets a lot of credit for pushing me in this direction. He had a lot of faith in my knowledge of the industry and letting me know, like, go work for yourself. You can do this. So it was a big fear to take a leap on myself. I've always been employed with big companies. I started on the retail side. I worked with Chase and Bank of America. So it was really scary to say, I'm going to leave the comfort of a salary job with guaranteed income, guaranteed health benefits, and I'll go start my own business and be completely self-reliant. That was terrifying. On the back end, there's a lot of stuff you have to do to open up a mortgage brokerage, because you have to have the correct licenses and correct insurance. You can't just say, oh, I want to originate loans, so go do it. There was several months of back-end work that took to get approved. There is the NMLS, which is the National Licensed Mortgage System. That's what you have to get licensed with individually and business-wise. So I had to get a license for myself and Ohana Lending. So there was a lot of, it wasn't necessarily hoops to jump through, because if you're doing everything correctly, it is a fairly smooth process, but it takes time. So that was a big thing that we had to take time on. Outside of the setup behind the scenes, it took a lot of work to network. You don't get loans just handed to you. You have to work for that. People don't know that you exist until you tell them you exist. So we had a good network behind us, luckily, that helped us get started. My sister, as most of the people watching probably know, SJ, she is great with social media and networking and marketing. So she got the ball rolling for us really quickly, which helped. But personally, it's been a struggle a little bit, just because you're going from, again, that security, you're giving it up and you're putting the faith in yourself. And if at any point, we all have self-doubt. So when you get that self-doubt, it's terrifying. So that's been my biggest struggle, but I have a great support system. I have people like you and John and my sister and my family that are absolutely behind me. And backing me and supporting me and making sure that we're going to succeed. So the fear is lowering every day. but it's still there. And I think it's always going to be there. And I think it's healthy to have that fear because it motivates you.
Got it. So get you a John is what you're saying.
Yes, get a John.
Got it. Everybody needs a John in their life. You know a John, hold them tight, baby.
So I would ask, what made you think John was a good fit? And John, why you, obviously she said you believed in her knowledge, but why John? Let's get John into this a little bit.
Why did I choose John? John chose me, to be
Hell
honest.
yeah.
Okay.
Everybody.
Like he is so analytical, and his mind is always going with the next opportunity. So we were literally sitting outside my mom's house at a bonfire talking about a loan he had just did and his experience. And we started talking about loans in general in the mortgage industry because it was right before these rates kind of went up and the home values went up. So it was a different market then. But we were talking about it, and he was like, you know this like the back of your hand. You've been doing it since 2015 when you worked on the retail side. And he was like, why don't you just go start your own business? And that question kind of sparked everything. It was a ripple effect. He asked that question, and then I sat down and I started thinking about it. It took several months for the idea to kind of settle in me. I didn't jump on it right away. It took some convincing. There was a couple of times where I wanted to back out, and he kind of reeled me back in. SJ2. My sister's been amazing. She is my biggest supporter. She is my biggest fan. So between the two of them, honestly, you can't say no to them when they say they believe in you as much as they did.
The power of someone believing in us.
It's powerful, man. Just
it
that
is.
little glimpse of hope that somebody gives you just by believing in something that you're trying to achieve can boost you into the next hemisphere. I'm telling you right now. And that's what it takes, you know?
So I have a question for you guys. Now I know we talked about the rates, but like, can you educate people a little bit more about those? Like, because people I'm hearing is, oh, everything's going up, it's going up, it's going up, and it's
inflation.
For me, I'm like, these are still great numbers, people. Like, these are not bad numbers, but I think as a whole society, we have people that are really freaked out. Like, oh, well, wait, it's going to come down. I don't believe it's coming down. That's just my opinion. I'm no mortgage person or anything like that. But can you educate a little bit on that, please?
Yeah, I mean, if you look at historical data over the last 50 years, I mean, the rates that we're seeing right now are on par that were existing 15 years ago. Unfortunately for the mindset of people is we only believe the last thing that we saw, and we think that to be the norm, right? So all of a sudden you just saw historic lows by mid 2020 all the way through 21. Rates that have never been seen before, right? You couple that with, you also had a period back, the last time the market crashed, like, you want to talk about, rates and home values going up, is we had a decade where we didn't build for that next generation of kids, right? So the kids that were 18, 20 years old in 2008, when the banking market kind of crumbled financially underneath us as far as homes went, mortgages went, well, you had a decade that you didn't build. So now all of a sudden, if you do a little bit of research, I want to say like 6 months ago, we were 4 million homes behind what we should have, preparing for that next group of individuals, that later 20s, early 30s, first-time home buyers. So, I would say, if you look in the 80s, the mortgage rates, they were 17%. 18%. You roll into the 90s, you were still mid 8s, 9s, 10s. Early 2000s, you were hovering right around the 8s, the 9s, and then it started to come down when it was pushing through that right before the crash time, but that was kind of a little bit of a false market. And, as me and Pam have discussed, and she was actually sort of involved at that time, and she would have a little bit more technical knowledge on that one, is like nothing was verified then, right? So if I made $40,000 and my wife made $40,000, and, at that time, people were buying $600,000 homes, right? And if I don't even care what the rate is. The payment alone on that, your finances don't justify that. Coupled that with buying brand new cars. But a lot of people were doing, that adjustable rate mortgage and then getting hit with a balloon payment, not thinking about that at that time, right? Just getting into that brand new home. Well, when you weren't verifying things and the market just all of a sudden, now you had everyone going into foreclosure and banks holding, banks not lending there. So you could even look at the rates in, I want to say it's from like 10 to, I want to say 14 or 15, they hovered in that like 3 to 3.5, maybe 5 range, but banks weren't even lending really at that time. You had banks saying, hey, we have a block of homes. If you have cash, take these block of homes. You know what I mean? Take these block of homes. So, from a historical side on rate, you're still probably hovering below what the 50-year, I would say you're probably about 2% lower than where the 50-year running average has been. The problem is people only see the last thing they saw. And then when rates jump, they freak out. But that's the nature of this. There's a lot more on the backside from the government side that plays into that, which, whatever, we're not going to get into that. But, they have to go up. Let's put it that way.
Yeah. And I think people forget that, like, we hit a historic low.
Sure. Yeah.
That was unprecedented. Like, you haven't seen that. So don't, everything has a balance, right? It goes low, it'll go up. It goes high, it'll come down. Same thing with everyday living.
Stock market.
Right.
Yeah.
So, I think
life is a roller coaster.
The more we talk about these things with our friends and our experiences that we have with lenders and the knowledge that we're getting pulled back, like, I think that fear base will come down. I at least hope. And again, I don't think it's crashing, man. I still think it's a great time to buy. Just my opinion.
So just to touch on that, he mentioned the mortgage crash. So that crash did not necessarily happen because of the houses. It didn't happen because of the rates. It happened because the people we were lending to. Not to say people don't deserve to own a home, but we have to make sure that they are in a good situation financially. We did what was called no doc loans. Fannie Mae and Freddie Mac wanted to, and those are the government backing of the mortgage industry. They wanted to make sure that lower credit and lower income people had the opportunity to buy houses. That's what started this whole thing back in before 2008. They wanted to give people with lower credit worthiness the option to own a home, which is great. I think that that's definitely something we should have done. But they didn't verify what their financial situation was. They didn't verify their credit worthiness, which is your ability to repay a debt. And they lended to people with no docs, no income documentation, no title documentation to make sure the house is even clear and there's no judgments or liens on people's titles, which is a huge thing. And people then that trend spiked the home values because everyone wanted to buy homes then because they could go in and get a same-day loan with no verification. So that spiked the home values because the need was so high, the values went up. Well, then they started not being able to afford their mortgage payments. The banks, though, had all this equity available because the home values increased so drastically. They foreclosed on all these people's homes and then did what John mentioned just a minute ago. They said, buy these blocks of homes because they're worth so much more, and we just want our money back for what we originally sold them for. The stock market crashed because of these home values. So this is not, the rates going up is not indicative of another market crash. So I want that to be clear. The rates going up is it's statistically going to happen. They're going to go up and down, up and down, up and down. But we have things in place now with lending. We verify income. We verify the home values. We verify every tiny thing we can think of to prevent people from not being able to afford these homes. So it makes the process a lot more stressful and a lot more complicated. But in the long run, that's why these things are in place, is to prevent another crash.
It's funny is that Freddie Mac and Fannie Mae, I used to do those foreclosures. I used to fix them up. That's how I started the drywall business, by doing those foreclosures. Sure. And we did every single thing inside there. And that's just funny. It was that's how I started Final Touch, yeah.
And the financial institute has protected themselves too, as coming out of it with PMI. The property mortgage insurance now that does nothing for the owner. that is merely to protect the bank. So it's a percentage off the value of your loan of what you're going to pay to them, which is, it's to protect them so you don't have that major financial crash within the mortgage industry. So that there's been things that have built in. And listen, you can get around that by going conventional and coming up with 20%, but that isn't always the realistic situation for every individual person. It wasn't for me when I bought my house. I had to pay PMI. It wasn't until I started gaining equity within what I had that allowed me to get out of that situation. But I had to start somewhere.
Yeah, everyone does.
It was my jump off point.
Two questions for you guys. I like my twos. This is my number 2 now. So.
Yeah.
Yeah. 2 questions for you guys. Which one do I want to ask first? We're going to do, since we're talking about this, we'll do this one first. The first one's going to be, what are different types of loans? Like give me some situations. I know there's probably a few, right? Quite a few. Give me a couple of what I know people know FHA and conventionals, but what's some stuff people might not know that's out there and available for them?
Yeah, so there is so many different types of loans depending on your situation and what you're trying to buy or refinance. So QM mortgages are the standard mortgages, FHA conventional, VA, which is for veterans, and USDA, which is for rural areas, farmland, things like that. Those are the standard mortgage programs that everybody usually knows about. You flip over to what's called the non-QM, non-qualified mortgage loans. These are for people who have unique income situations. We have a lot of self-employed people out here nowadays. Business owners, the number of business owners is high right now because everyone is out there owning their own business, fighting for themselves. And it is hard to balance that, how to do your income. Everyone struggles. I know I've talked to several people. How do I file my taxes on my self-employment? There's so many different ways. You want to contact your accountant. What I can help with, though, is that let's say you have a lot of income coming from your business, but you don't want to claim all that income on your tax return. So your accountant says, hey, we can file your taxes this way, and you don't show as much income bottom line. Taxes aren't always reflective of what you actually made, because you have to pay taxes, you have write-offs, you have certain things that go on your tax returns that your CPA advises you to do, which is beneficial. But then you go to want to buy a house and you show no income because your tax returns for self-employment, you grossed $500,000, but you may only show $100,000 on your tax returns as net income. There's not much you can do with that when you're looking at a $500,000 house. So we go onto the non-QM side and we can do what's called bank statement loans. We use the income coming into your business bank account to qualify you. So we're not looking at your tax returns. We're looking at the actual income you're getting before expenses. The lenders have inside calculations they use to account for your expenses. So you are just getting credit for your income. They are still making sure you have enough money to afford a house, but it's just a unique way to qualify someone if they don't have income showing on their tax returns. Another thing for investors, we use the rent you're getting on your home to qualify you. So we don't need to verify your income because the amount you're charging in rent on your investment property, or you will charge if you're buying a new one, covers your mortgage payment. So therefore, as long as you continue to rent, they can qualify you on that income without needing to verify your income. So there's a lot of different unique situations. There's so many more that I could go into, but it's honestly a person by person conversation. Everybody's financial situation is different. If you have
what happens if people are trying to refinance and let's say their rate is low? Yeah, gotcha. I'm number 2. So like me personally, I have a low rate. I got my house in middle of 2020. Rates were low. I got 3% or 2.9. It was really low, right? And I want to remodel. But I don't want my rate to change. Like, what does that look like? And like, what's the best solution to get that handled?
So there's definitely you definitely want to look at your situation. So I've done a couple refinances lately. It's more of a purchase market right now for sellers to sell their homes. So more people are buying than refinancing, but refinancing is not off the table just because the rates are a little bit higher. Refinancing works if the numbers work. So if someone wants to use the equity in their home, if you bought your home 2 to 3 or more years ago, chances are you have a substantial amount of equity in your home because the values have gone up. However, depending on what you want that money for is going to determine if it's beneficial to increase your rate. That's not the only way to pull out the equity in your home, though. We can do second mortgages, home equity loans, and home equity lines of credit, which means you're not touching your first mortgage. You're leaving that the same. So in Justin's case, you would keep your rate at 2.9% or whatever it's at right now, keep your mortgage payment. We could then look at pulling out the equity in your home on a home equity loan. Now, those rates are a little bit higher. They change daily. They're adjustable sometimes with the market. So that makes people a little bit scared. But again, that's looking at the trend and the history. It's going to happen. It's repetitive. So I don't want people to be too scared about the rates right now. There's a lot of options to pull out your equity, though, and refinance. If you are trying to debt consolidate, getting a higher rate is not necessarily bad because you're eliminating credit card debt that have 25% interest rates. If someone had an emergency and they had to put substantial amounts on credit cards and they're paying hundreds of dollars a month, we can consolidate that using the equity in your home and not change your mortgage payment. So yes, you're paying more over time on interest, but your monthly expenses are now more affordable to you and you're in a safer financial position because you're not paying those high credit card bills. So refinances are not off the table with the higher rates. There's several options. Again, I want to look at everybody's individual options and individual situation because everybody has a unique situation. A refinance might not work for somebody right now because of what they want the money for. And I would advise them that. I'm never going to put my clients in a situation where they can't afford what they're doing just to make myself some money. That is not what we're about. I want to educate my community and I want to educate people to do what's best for them. The mortgage process is extremely stressful and extremely detail-oriented, and it's scary. It is. And so you guys need people behind you that are going to educate you and hold your hand and not just sell you a mortgage. And that's what we do.
So a question for you on speaking of the refinancing and getting your debt credit to 1, right? Like, because you've been doing this a while, so maybe you've seen it. Do you see people doing the dumb mistake of like, oh, I'll get all my stuff into 1, lowering my debt over time, and then next thing you know, they're like, oh, I can afford this now, and what they're doing is adding more debt to something. Like they're not getting out of the situation that they were in. You literally just lowered it and then added more debt. The point of that debt is to stay out of debt, like to get that mess you've made cleaned up. Right?
Exactly. So it's important that when I'm doing a debt consolidation loan, I'm asking my clients what their intent is. Do they want to free up credit card debt because they just want to go reuse it? That's not plausible. That's just putting yourself, like you said, in more debt. Now, if they're trying to, I just did a refinance for a borrower and they paid off $15,000 in credit card debt. She's putting those credit cards away and only using them for an emergency. It frees up funds for an emergency if you have it. But it's not to free up funds to go reuse them. That's not debt. That's not what we want to do. So again, it based on everyone's individual situation. So I want to sit down with them and ask them, what is your purpose for paying all this off? What do you want to do with any available extra money? And then see what works best for them. Because if they just want cash available for an emergency, paying off debt will be a good idea, but it may be better just to do a cash out refinance and pull out this cash if they need a large lump sum. It just depends on everyone's individual situation, but it is also on the borrowers to be responsible with, oh, I have all this available credit. Let me not use it unless I need to, because I want to keep myself in a safe financial situation.
So, I mean, in your position as the lender, it sounds like you've got to ask some really tough questions, like personal kind of questions, right? Like, hey, back up off me, lady. We just met, right? Like, it gets uncomfortable
sometimes. It does. I've had a lot of people come to me like, do you want the blood of my firstborn child next? Because we want everything.
That's what it's like.
Yeah, we want everything.
Listen,
Yes.
it is. I told me and Tiffany are in agreement. We're never buying another house again, which is probably not true. But like, dude, it was. Listen, it was such a stressful. John, you can attest.
Yeah, I know. It's stressful for you.
Justin, real quick, because I can't see their name. There's a user that says, "I'm thinking of buying a home, but my first time." Can we get them in connection with them?
Yeah,
Can we make that connection.
That's David Wingo. Yes.
Okay.
He's thinking about buying a home. If it's first time home, what does that look like? So, I can connect them. Definitely.
Yeah, that's a great lead for you guys, man.
Absolutely.
Come on the Morning Mojo. We're gonna get you a lead. You know what I mean?
There we go.
Good.
Yeah.
That's why we get paid around here.
Right now, rent. Yeah, I get paid in coffee, so you know what I mean. Now, so that's one thing. It's like rent right now. It's just ridiculous. It's just out of this freaking world. Like you're literally spending the same amount on mortgage that you do rent. And it's astronomical what they're asking out here, and it's insane to me. And like that's one thing is like. All these people buying Airbnbs and buying, using it and for their advantage to make money, and out of state people, like, is that like making a strain on the housing market with all the Airbnb people buying up and out of state people buying up? Because there's no restriction around that, right?
Yeah. So it's not necessarily just like the Airbnbs. It's any kind of investor. So because it's a seller's market and values are so high and the inventory is low, which is the amount of houses actually available, and the want is so high, what's happening is that investors who want to do Airbnbs or they want to rent them or they want to just take them and improve them and flip them, they have cash available. They have assets to buy these houses up in cash. So there's no appraisals needed. They're willing to buy it for potentially more than it's worth right now because they have a long-term plan. And so they're taking houses and buying them cash and taking them away from people who need financing. So they're not staying on the market long, which makes it difficult for buyers to find them. And they're not staying in they're going above asking price or above value sometimes even, which also makes it difficult for first-time home buyers, especially who may not have a lot of money to buy these houses because they can't come up with that much down payment. They can't come up with the closing costs needed. So it's definitely a seller's market right now, which means it favors people selling the houses to get the most out of their home. A buyer's market favors us and consumers as buying a home because either the rates are lower, the housing values are lower, so we're able to more easily qualify and more easily pay for a home. Mm-hmm. Right now, it's still a seller's market, which also is what scares buyers. But there are ways around that. There are benefits to these certain markets. But it is difficult right now. The inventory is low. It is increasing, but it's low. And they're not staying on the market that long, which makes it really difficult for buyers to find the homes they're looking for.
Got it. Yeah. So, not the only reason I use Airbnb is just because it's like the most
It's big right now. Yeah.
Yeah, it's huge.
Absolutely.
So Florida, what's the influx of people coming in compared to homes? And like, is that why the demand's so high? Is because there's so many people trying to come to Florida? Because our great governor, I think, is why, but whatever.
Florida is always a place that attracts people. Florida attracts people because of the tourist aspects of it and because of just the overall environment. It's been a thing for I don't know how many years, for years and years and years, for older people to retire down to Florida because the cold hurts their bones. They're older. They want to be on the beach and they want to relax. And South states offer that relaxing appeal. So
Jen Verge, thank you.
Jen Verge just gave us an awesome statistic.
Thanks, Jen.
Hey, Jen.
845 people a day are moving here.
And
That's
Jen
insane.
actually gave us permission because you have to ask for permission to put your name on a private group. That's just what it is. And she actually did that. So thank you, Jen, for that. You're the best.
Thanks, Jen.
Can we drop that link in here? Justin, how to get permission, give you permission?
It's on the top of the deal of the StreamYard. Like on the post, it actually shows a little link.
Okay.
It says if you want to show your name in the comments, here's a link, and you just give it permission, and from now on, it'll be done.
Awesome.
The other side, dude, too, with the home, like the values of the homes and everything, too, is you have major corporations buying up these homes, people that have what I like to call FU money. So
I need some of that.
yeah,
we all do.
So, you got, they're big in the stock
BlackRock.
market is BlackRock. They're backing, a lot of large banks are backing. I mean, there was a period in time in 2020. I remember like when the world changed and flipped on its head on us in the beginning of it, I was looking at homes and values were whatever. But when Justin bought his home was like the beginning of the spike. And we started to see these homes fly off. Like, dude, like it seemed like homes were cruising by mid 2020 and moving forward. Why? Is because they can manipulate the market too. They could buy 6, 7 homes at a time, sell one back to themselves because there's no rules against that, and change the market and raise the value on the other 6 that they have bought. You know what I mean? So it's like insider trading with no rules against it. So, I mean, there's a lot of contributing factors, and, Florida's always been a transient state, people in and out, in and out. Like Jen just placed, there's, 845 a day. I'd be curious on the number of the people that leave also, because because this market's so hot here, Texas, Carolinas, if someone was willing, you could sell your home here and move to the Midwest.
That's actually a great question, man. I've never thought about that. That's a
so,
good.
I mean, the numbers coming in, but there's also people leaving saying, you know what, I'm over it, I'm out. You know what I mean? So I don't know how that all works out in the averages.
It'd be nice to know, so where you can like see the, like the fluctuation of it.
Please
you got to remember too, is people in California, New York, in Long Island. I mean, dude, their home values are through the roof. They're selling homes there they're like 1,000 square feet over in California. There's a guy I met on a golf course. He had like a studio of like 1,000 square feet, no yard, parking lot only. He was out in California. He sold the place for $1.1 million. Well, now bring $1.1 million in cash here.
It's insane. Yeah, I know. That's the problem.
And he bought his in the 80s for $200,000.
Yeah.
You know what I mean? So it's like, that's pure cash that's coming to the state of Florida. Now, are you going to, so the guy sees a 3,500 square foot home and the asking price is $550. He's like, I'll give him $650. I just want it.
Oh yeah.
You know what I mean? Like he's still sitting on, $450,000 in his bank account, everything paid off.
And double the square footage.
Right. Yeah. So yeah, it's insane, man. It's definitely crazy times. Yeah. But it's not impossible times though either.
That's the thing, is like people coming from New York and all that, and they make more money up there. So they're just buying a vacation home here.
Sure.
Right? And that's making it, driving up the asking price of everything, and that's something that's really throwing it all off. I can't compete with New York or California. My paycheck don't match that crap. You know what I mean? Like, and
we don't have their taxes though either, so we're good there.
True. But like you, no matter what, you can make more up there if you really think about it. You know what I mean? Like unless I'm mistaken, but you can make more up there no matter what. You might have higher taxes, but down here you make less compared to New York. But yeah, you can't compete with them.
Yeah, so on the other side too, as you guys touched on, the whole process of buying a home, and I can remember when I had purchased my home in 2017, and like I literally I knew a realtor and I got with her and she's like, do you have a lending? I'm like, a what? No, I haven't done that. I wanted to go see what I wanted first. You know what I mean? And then it's like, oh, you got to do this. Well, now you got to go to insurance. Like, Ohana Lending Group now, it's our jump off point, right? It's our starting. It's not stopping there. We are going to add more to this as time goes on to make that process easier. Like ultimate goal, one-stop shop all the way across the board. Right. So it's no longer everything controlled in one office. So it's no longer, okay, now you got to go contact this person. Now you got to go contact this person. Now you got to go do this. Like the goal is to have everything under one roof. Right. So when we have our slogans where you're treated like family, the other side of that coin too is, listen, if you call us and it's 9:00 at night, if my mom calls me at 9:00 at night, I pick up the phone. Absolutely. If my friends call me at 9:00 at night, I pick up the phone. If I'm awake, sometimes I'm asleep. Sorry, guys.
Okay, I'm glad he said it.
Yeah, right. I'm about to go.
But, it's a mindset thing, right?
It
so
is.
if I'm going to treat you like family, I'm seriously going to treat you like family.
You know, it'd be cool, John, if you guys had if you guys, the office, like if you get this building and you have one-stop shop, put a dinner table out, bro. You know what I mean? And that's where you close the deal. You know what I mean? Put a big old dinner table out. Break bread. Let's do this.
Right.
So when you say a one-stop shop, what would that include?
I mean, from start to finish, you need someone on the realtor side. You need someone on the origination side. You need someone on the processing side. Now, Pam, prior to originating, had 10 years of processing, which is probably the more detailed side of making sure the loan goes through with not any hiccups. You know, because I can tell you from my very first time of going through the process of a mortgage, it was like, oh, well, now we need this. Well, now we need this. Well, now we need this. Yeah. The beautiful thing right now with us is having Pam being who she is. She already knows what she needs on the front side. So there is no more contacting that person for one more thing, because that is annoying, by the way.
Yeah.
It's like, I don't care. It's like, you're like, damn, dude, anything else? You know what I mean? Like,
and that's the nature of this business. It unfortunately, it can be a bit of a piecemeal. It can be a bit of an underwriter saying, I need this, and then I need this, and then I need this. No one's perfect. So I pride myself in doing the best I can to request everything up front. But on a loan that we just are getting ready to close next week, the underwriter forgot to ask me for a document. How that happens, I don't know. We started this process. This was a lengthy one. Started a couple months ago. It was a little bit of, we had some issues. But the underwriter calls me and goes, oh, I forgot to ask you for this 2 months ago. Okay, well, now I have to go back to the borrower and say, I apologize. We did not get this up front. I didn't know that we needed it. So it's transparency as well, letting them know I may always have to come back to you to get something else. But because I have my processing experience, which is where I'm really passionate about, I love processing loans. I can pretty much set you up for a big picture. Like, this is how this is all going to work. And real quick, someone commented about a title company.
I saw that. I was going
to. That is absolutely a huge thing.
Yeah, I saw that too.
A title company is huge because some title companies are not great. Some people may think, oh, I'm the originator, so I do it all. I try to, but I can't do it all. And if you don't have communication with like your title company, your insurance agent, and your realtor, that is probably the 3 things outside of my borrower that can hold a process up. Having a title company that you trust is crucial. I have a couple that I work with, one that I mainly work with, Platinum Title Services in Clearwater. I absolutely love them. I have a relationship with them, so they bend over backwards to help me, and I help them. So if I know that my borrower is tricky, I don't want the title company to call them and get yelled at. I say, give me what we need, and I'll call them because I don't want you to be put in that situation. So we have a mutually beneficial arrangement where they bend over backwards for me if I need a rush, and I bend over backwards for them, and I do a lot of communication with my borrowers for them, which saves them time on the back end. So like John was saying, realtor, originator, lender, which the originator helps with the lender, insurance, and title company. And so there's a couple other things in the middle that may come up, but those are the main aspects outside of the borrower.
Is anyone doing that? Because that's a great idea. Is that a new concept? Are they not done this? Have they tried it? And it's like, what?
So there's a lot of
magical.
Yeah. So in theory, this sounds like great, right? It sounds like something everyone should be doing, but you have to make sure you do it right. There are a lot of laws in place to prohibit conflict of interest. There's a reason why the appraisal process, and that's another big one, the appraisal. There's a reason why the appraisal process is so hard, because I, as an originator legally, I cannot talk to the appraiser because I'm not allowed to influence them and say, well, I really need my borrowers to have this value. So can you please help us out? People do that. And so there's a lot of laws in place to prohibit schemes that come up in the mortgage industry. Mortgage fraud is huge. It's crazy what you can get away with on paper if you're willing to risk it. I'm not willing to risk that. Once you lose your license, you can never, ever get it back. You get one time and you're done in the entire industry. I'm not going to risk that. I don't care how much I love you. I'm not risking that. So
true story.
There's a lot of laws in place. So it takes a lot to make sure that legally you can operate all these. And it's not necessarily us operating them, though. It's having other companies come in and work with us. Like Jen, Jen is a huge realtor of mine that even if I'm not helping her client, she can call me up and ask me questions and I answer them. I do not care if you're sending me a borrower because we're helping each other. An insurance agent. Yes, she's my sister, but she is a great insurance agent. SJ knows insurance like the back of her hand.
She's our go-to.
Yeah, it's not just having all these under our ownership. It's having partners that can stay in the same office with us and say, someone comes to me, I don't have a realtor. Go down the hall and talk to my friend Verge. She's amazing. Jen will handle everything you need. You need insurance? Go down the hall and talk to SJ real quick. So it's not just us owning them, it's having them easily accessible. Those
are two things that I freak out about, okay? Insurance, that includes all, health insurance especially. I freak out about health insurance, man. It's like, oh my God, especially health insurance. Like, I'm like, oh my God, there's so much to choose from. What do I do? What is this a good rate? Is this not a good rate? What is this? What am I gonna, And then it's like, and then also in mortgage, man. Like, listen, when I bought my home, it was just, it was such a stressful time, and gosh, and I just felt like nobody would communicate with me. Nope. And nobody would communicate. Like, just call, just answer my phone call and just be like,
absolutely.
Justin, calm down, homie. You know what I mean? Something to ease my mind, because sitting there, we're human. We can sit there and be like, oh my gosh, is this going to go through? Holy crap. And like, I'm moving out of my house that I have rented for 3 years, and they're having somebody else move into there. That's called homelessness, if you don't know what that means. And they're having somebody else move. Okay? Because I'm saying I'm buying a home. Hey, we're buying a home. Yes, they said yes, and I'm going to trust them that they said yes. And so, listen, yes, we're going to forfeit our home. They already have somebody moving in. And I'm like, holy crap. Oh, my gosh. Yeah. Is this going to go through? And then nobody's answering the phone. And I'm like, bro, oh, gosh, dude, like the worst. And then I had to move in with John for a week. It went through, but
and I had the worst of it.
Yeah. Whatever, John. You loved it. You loved every moment. He was like, "Why are you leaving?" No.
No, that's what sucks. Is I started on the retail side. I started at the bottom of the totem pole in a call center. It is hard to reach someone in a retail environment because you have so many people doing it. They overwork you to a certain point. So as a processor or an underwriter, I had so many loans that I was working. I could literally not pick up my phone sometimes when it rang because I was right in the middle of an income review. I was right in the middle of a title review. So it sucks because they're overworked. I don't have that problem. If I'm in the middle of something, also because I text. So if I'm in the middle of something and I can't answer the phone and I have a borrower calling me, I'll shoot them a text real quick. I apologize. I'm in the middle of something. Give me 10 minutes and I will call you right back. I either finish what I'm doing or get to a stopping point so I can call them. Because if they're calling me, it's important. They have a question. Mm-hmm. So I make sure I answer my phone. I have so many ways people can contact me. That's communication. Yes. When we talked about what we were going to do to set ourselves apart from other people, communication. Picking up the phone was huge because even if it's bad news, you have to communicate it. Yes. I have to be able to tell you, be transparent and say, look, this is what it is. If it's going to be a rough road, I tell them it's a rough road, but I'm behind you and we'll get through it.
Can you do it like what?
Is the ultimate key to success in this kind of industry.
You need to do that in a Scooby-Doo voice. Rough roll. I don't know why that came to mind, but it did. But hey, we're so how can they find you? Because we're about out of time. We got to put the good news on real quick. Some good vibes, you know.
Absolutely. So we have our website, ohanalg.com. You can find our application on that website. You can text me. I have our cell phone and our business number on the website as well. You can text Ohana to 33655, I believe it is. Let me double check that before I tell you wrong information.
Yeah, double check that. And I'm going to go into the good vibes and then we'll kind of let it be. You know what I mean? So if you guys are, just new here, this is our good vibes. We try to do this every Thursday, on the Morning Mojo to kind of put some good news out there, good positive vibes, So here we go.
The good vibes. I know you're all about the good vibes. We are all about the good vibes.
All right. Let me see if I can get this. Oh wait, let me. All right, there we go. All right.
You just want to push your hat, like the button on your hat every time, like push
do it.
button.
Just
push
do
button.
it. Are you playing me? All right. So this is Victory High School. They just had their first graduate. This is a nonprofit in Pasco County. So I'm going to play this little video. This is from Bay News 9.
We're doing sunsets. Paint it on the bottom. Like the empty spot at the bottom, you're going to paint all of it.
Christina, the video's not there.
The video's not playing, Justin.
It's not?
No, it says click to exit full screen.
Huh.
There we go. You got it.
Sorry. Let me just start that over.
We're doing sunsets.
Is that better?
Paint it on the bottom. Like the empty spot at the bottom, you're going to paint all of it.
Christina likes to express herself through her art.
Well, I want to be an artist. I might want to become a tattoo artist one day.
But not long ago, she used more self-destructive ways of expression.
Well, the drugs I was doing, I had no motivation at all to do anything.
Christina says she had a difficult childhood and she turned to drugs to cope.
I don't think I would be here today if I didn't come to this school.
This school is Victory High, Tampa Bay's first high school for kids in recovery. And Christina is one of its first students.
She came in, like you said, broken, and we've walked every step of the way with her. We do a lot more than just school. We're every component. I mean, we're best friends, we're family, and anytime anything she's been struggling with, we've walked through with her.
It was the family Christina had wanted and needed all her life. Soon, she was getting more help and support than she ever could have imagined.
Knowing that my future is in my hands and I control what happens to me, and knowing that I'm finally on a good path, that makes me happy.
It's got a lot of people at Victory High happy too, because that path has led Christina to become the first student to graduate from the school.
Thank you. She's been here since the very first day we opened. I'm so excited. I'm so proud of her. She's like my daughter. I am more proud of her than she'll ever know.
I don't know. Something tells me Christina knows. Trevor Pettiford, Spectrum News.
That's some good news. That's good vibes right there, buddy.
Man, listen, I got to go over there yesterday and I got to speak, man. And that little girl, she doesn't realize it yet, but like they're breaking chains. You know, when I first heard of Victory High School, I thought to myself, like, man, that ain't gonna work. No teenager wants to hear about that, right? But like, I was wrong. Kids do want help. Kids do want relief, man. And like, it's really, really neat to watch her break chains in our community and set the standard that, you know what, more teens can do this and it's acceptable and it's okay to. And like, it takes a lot of courage, and like she did it, man. And like that girl's story's had a few obstacles in it too, man. Like, you know, I know from my addiction. So to see her do it at such a young age, like it's absolutely amazing. And my hat goes off to you, Christina, and also Tina for her vision over there at Victory High School. A round of applause to you. Yeah. Thank you, Tina, for everything you do and your vision. So it's amazing to see.
And if you want to find out more info on that school, you can look them up. I think it's Florida Recovery Schools of Tampa Bay. Look them up on Facebook and follow them if you want to get involved. And Pam, what is that? What's that number?
I was right. It was 33655.
So what are they supposed to do?
You can text Ohana, OHANA, to 33655, and it'll immediately enroll you to receive the application via text. It's amazing platform I use. Is so compatible with the phone. You can access it on your phone. It'll pop up right there. You can submit everything. You can submit documents. You can reach out to me. You can communicate and get everything started that way. Also, just give me a call. My cell phone is 813-505-3369. Text me or call me if you have any questions about the mortgage. process. You can also reach us on Facebook. It's Ohana Lending Group LLC on Facebook.
Perfect.
And again, Dave Wingo was looking for a home.
Absolutely.
So let's make sure we make that connection. Let's not forget about that. So
I'll make the connection. And thank you guys for coming on today. And then next week we got Mr. Jordan Long that's gonna be on here, and we're gonna be press and play and stuff like that. We're gonna have 2 of these, bro. You're gonna be like well, thank you guys for being here. Thank you, Jane, for coming on. I appreciate all y'all, and love you guys, and enjoy the rest of your week.
All right,
Thank
guys.
you.
Good.
great session, guys. Thank you. Stay
See you,
blessed.
Bye.
Tell me how